Hey guys, welcome back. In this video, we are talking about the next big AMC record, the $1,000 per share pre-squeeze, how the short knows MOAS is coming, and many more in this video. First, we're taking a look at this. What's the justification for an 8% downturn? Is it a record Q2 or record box office weekend? If anything has changed, it's in favor of AMC. So one of the things we need to look at is today we were down at 1.8%. We closed the day down at negative 5.96%. Now, obviously, this is ridiculous because nothing has happened to AMC since the weekend. And you may look at this and think that AMC has suffered bad news throughout the last few days. But if anything, it's the complete opposite. We obviously know about the record Q2. We especially know about the new record revenue that they have broken this weekend, which in turns would reflect in the Q3 earnings as well. We also know that these are all very good news, yet AMC price is down. And so to me, if this isn't the most obvious manipulation, I don't know what is. Because what we've talked about was AMC records highest weekend revenue in its 106-year history following the release of Spider-Man and Odyssey. And what we have to understand is that recently we've seen these pieces of news before in the past, and we're seeing this again right now. It isn't an error, it isn't a mix-up. It's what AMC it's constantly delivering. They are breaking records upon records. They're showing what the future of AMC is going, and they're showing just how prominent the market is right now. And so when you take all of these into consideration, you understand for us what the truth is, what AMC going to the future would be, and especially what Q3 earnings is going to show to us. And so some things I want to say is that don't let today's minus 6% make you think that suddenly AMC is going through a turmoil, suddenly that AMC is having rough turbulence, because nothing has changed since the good news we saw this weekend. If anything, it's only going to continue because we have so many more things that are coming out. And you can see that right now they're trying to say there are more sellers and buyers when you take a look at AMC because of obviously what happened with the price today. But we have to remember that AMC is doing exactly what it's supposed to be. People are saying that investors appear to lock in gains after the stock's sharp run in recent weeks. Now, to me, that is honestly a ridiculous thing to see, because we apes have already known what AMC is going to do and what they're trying to do. So you're telling me after all of these times that we've held, after all the negatives we held through, suddenly we see AMC finally showing what everything we have talked about, and then we decide to sell because it's gone up by what? 1% on Monday, it's gone up by 1.81% on a Friday. Of course, that's not the case. And what you have to understand is that the reason why AMC is dropping here isn't because retail is selling, but because they're worried about what AMC is going to do when we go above 3%. And so this is what I think in terms of the manipulation. This is how I know that this isn't done by the retail, because there is no way we think that. And at the end of the day, it's just psychological warfare. Biggest weekend in 100 years, competitors soaring, pre-market looking great, then rug pull. They want us to leave. As long as AMC is open, I'm staying. And you can see here, I've waited 5 years for this. So we've been here for a very long time, and they think that a 10% is suddenly gonna make us leave. And this is how I know that the price in terms of what has reflected today isn't done by the retail. And one of the things that we have to talk about is when AMC released their earnings, we saw how great that was. And so that AMC is now doing another record breaking, we understand that Q3 earnings is only going to be better. So by having that in mind, why would we sell before we see the Q3 earnings? Again, it doesn't make sense. And the fact that it doesn't make sense, it tells us exactly what is going on. Furthermore, we still have so many more bangs that are coming out. Remember, Avengers Doomsday, it's coming out this year, and the ticket sales are already going insane. And we have to realize this. If Spider-Man was able to do the numbers that it has done, just think about what this film is going to do. This has been extremely anticipated. This is something that everyone has been waiting for a long time. And when we talk about the next big break in the box office, for me, there may be films that will come in between this, but one of the things that I do understand and that I do believe is that Avengers Doomsday is definitely going to be something that breaks the record. It isn't to say that there won't be any other movies that break the record, but considering how anticipated this film is, it's only going to do even better numbers. And this on top of everything that we have already seen for Q3 and what this is going to do for Q4, once again, you've realized what AMC is going to do. And that's what people are seeing. And you can see for AMC, when we talk about Spider-Man, when we talk about what Odyssey has done, we've see 10.2 million moviegoers attending AMC. And what we are already seeing is that attendance in cinemas for the year to date is up 11%. And Avengers Doomsday is only going to increase that. The only thing we should be looking out for, at least for me, I'm not worried about whether or not that film is going to do crazy numbers, because for me, I believe it will. The only thing that I'm looking for, that I'm interested in, is AMC able to get even more market share by that time. We know that AMC is investing in infrastructure. We know that AMC is trying to increase market share. So the only thing that's important to me right now is just how much of that market share can be delivered when we see these films being released, because we know that people are going to watch it. We just want people to watch at AMC because that reflects in the earnings. And so we have to understand AMC is breaking all-time records and price, yet the price is still being heavily suppressed. $3 is nothing. Remember, AMC was trading at $3.93 a share during COVID. Not financial advice, but AMC should be $1,000 share right now. Pre-squeeze is my opinion. And this is something that I'm sure many apes agree with, because we've seen what AMC was able to do. We've seen that during the time when there were no movies, when AMC had zero revenue, we saw what the price of AMC is going. And during the time when we did see pre-COVID of how well AMC was growing, nothing has changed, but actually the better of AMC. Infrastructure improved, financials improved, the future projections have improved. And when we talk about where AMC could be, even without a squeeze, when we encounter and factor in all the sentiment or the true value, when you encounter all of that, you understand AMC could easily 10x, 100x, 1000x from where we are right now. And this is why we've always said AMC has such deep value. And it isn't just the apes who know this, shorts know this as well, because they've realized that if AMC, if it ever is able to reflect its true value, then easily all of these shares will get evaporated. All of these shorts that they have created, all of the synthetics that they have created, they will all go back to bite them. And that's why we're seeing the constant manipulation. You even see it, the post-2021 spike, we saw AMC traded above 20 for over a year in a healthy manner. Now they want us to believe there is resistance at $3. And I think this is a very clear understanding of AMC, because they now trying to make us believe that everyone thinks over $3 is overvaluation for AMC. And so that we should all take our profit here. But it's just like what I said earlier, when you compare where AMC was during COVID, when you compare where AMC was pre-COVID, and you see how it was trading, there is no way they would think that we actually believe there is resistance at $3. The only reason why there is a resistance at $3, it isn't psychological, it isn't an overvaluation, it's because they've understand that in the short term, when AMC closes above $3, especially at the end of this week, all of the gamma exposure that's going to happen, all of the options that are going in the money is going to pressure them to cover. And that's what they're worried about. It isn't a factor of overvaluation, but rather with the gamma exposure. Now, saying this, apes obviously understand what's going on. If you do your due diligence, if you watch the videos, if you do your research, if you been here for a long time, you understand exactly what's going on. And just as a value investor, when you look at AMC, you know what's happening. And for many apes, just like Stefan, who has bought into more shares of AMC. Now, one of the things mentioned is talking about how the market makers have stopped selling the 2x AMC certificates via Swedish broker, a rather promising sign. Now, for this, I am quite intrigued by it. Now, the reason why I say this is because for them selling these 2x certificates, it feels like they were trying to sell shares of AMC without actually selling real shares, because with these certificates, there may be a loophole where they don't need to actually locate shares. So it's a way of selling shares of AMC without actually people asserting real pressure, because you're not buying AMC shares, you're buying the certificates. And with these certificates, they could potentially bundle it up, or they could just throw an imaginary number to try and track the movement, but they don't actually offer out any shares, because they're not worried about in terms of the 2-5% short-term movement. They're worried about, firstly, are we still buying up the real shares? Are we still buying up the float? And they're worried about when we do buy up these shares and assert the pressure, is AMC going to go up 100%, 200%, 500%? And so the fact they stopped selling these 2x AMC certificates, it feels like they're worried about what's going on. And that's what we are seeing right now, especially with everything that's that's ongoing. And another thing that to take a look is the fundamentals of AMC. We've already talked about how well Q2 is doing. We've already talked about how well Q3 is going to be, and of course the future projections of AMC. When you take a look at this, and you can see what we are seeing right now is 2.7 billion in positive equity, aka book value. When you take the book value and you divide by the shares outstanding, 3.02 in book value per share. So this is what we are seeing with the algorithms, how they're pricing and speculating. Now, even on this normal premise of the book value divided by the shares outstanding, you're seeing we should be at $3.02. Now, the only reason why we're not at $3.02 is going back to what we said earlier. They're worried about the gamma exposure. They're worried about the options that are going in the money. And that's why, despite the fact what the algorithms is telling them, despite the fact where we should at the very minimum see where AMC is, we're still not seeing that. One of the things I want to talk about is that just because book value suggests this, it doesn't mean that over $3.02 is overvalued, because you got to worry about future earnings, future growth. When you take a look at some of the AI stocks right now, none of them are trading at their book value per share. They're all trading at kind of 5x projected growth, it's 10x projected growth. And so we have to understand that the same thing applies to AMC as well. But it's just the fact that even the algorithms are stating that it should be 302, yet we're not seeing them close above that because of the worry. However, saying all of that, we are of course seeing AMC going the right path. We are seeing where AMC should be going. When you take a look at the market cap, you understand what the potential for AMC is. You understand where we should be going in terms of the short term. Do I believe that AMC should be higher than the all-time high? Of course I do, because when you account for everything that's been ongoing, when you talk about exchange for AMC, when you talk about the synthetics, when you talk about the FTDs, when you talk about FOMO, the sentiment, the psychological, and again, what we've always talked about, the future growth as well, AMC should definitely be higher than that. That is something that I strongly believe. But the very fact we are seeing them moving in the right direction, today's minus 6% isn't something that is too detrimental, because we are still doing very well. But I do believe that AMC should obviously go higher. Now, furthermore, is that well, everything that's ongoing right now with the dramatic price action, and again, the 6% that we saw today, despite the fact that there was no bad news, that AMC is still going as promising as it is, we are seeing something, or we are expecting something major to be happening. And that's something that we should definitely keep our eye out for, because we've already seen the recent kind of how shorts are trying to navigate AMC. We've seen how institutions are trying to position themselves in AMC, and it all feels like that's something is ongoing right now. And this is what we're seeing, especially with the volatility in AMC, especially with the red day. Despite the good news, it all is leading up to one big thing. And just like we talked about, BlackRock feels like they need to own 48 million shares, probably to offset the over leveraged, deeply buried AMC short position in swaps and derivatives they can never locate during our AMC MOAS. They know the MOAS is coming, and this is something that we've seen with UBS already. We saw when we talked about this where UBS bought into 30 million shares of AMC. This was during the time where regulations was really on their tail about margin requirements, about the regulations. And as soon as we see regulation says, all right, we're not worried about your margin anymore, they we decide to kind of aid you and help you, they decide to sell the AMC shares. That to me is just the biggest indication of they knew that AMC was the reason that they were getting margin called, or at least they were getting margin call warnings. And what they did was then to try and offset it, to make their books look better so that they can get the support that they need. And once they've done that, they decide to sell the shares and try and suppress AMC furthermore. And this to me isn't something to be worried about, because I'm glad they've sold their shares, because this just means that they're net short with the AMC swaps, with the AMC toxic swaps, and it allows retail and it allows other institutions who actually want the good future of AMC to buy in, and that is obviously going to come back to bite them, and that's what we want to see. Now, one of the biggest reasons for why we talk about margin, why we talk about collateral, is because recently what we are seeing in Japan, there has been something going on. So one of the things we talked about is the Japanese yen carry trade, and we talked about how that has a major effect, not just in Japan, but the US market as well. And we saw how they were getting weaker. We saw how right now Japan was trying to obviously intervene. We saw the US trying to intervene. So they reportedly spent 160 billion this year to stop this weakening of the yen. But what we then saw was that after the intervention, you can see from 164, it dropped all the way down. It tapped at nearly that low of 155. So this is what happened when the government intervenes. But it doesn't stop there, because right after, in just 36 hours, they were going up 273 pips. And if anything, they've gone back up and made another high at 157.962. And I think that's the most interesting thing right now, is that their intervention is not working. And this is why we're seeing the US trying to intervene as well, because they understand how severe of effect this is going to have on the US market. So this is precisely what they're trying to prevent from happening. But we have to understand is that as this gets weaker and weaker, as we see the Japanese yen trade kind of getting worse, we are going to be looking at the collaterals dropping. We are going to be looking at the shorts really struggling, and that's when we will take them. As always, none of that financial advice, and I'll catch you guys next time.